Alrighty, folks, the one and only Mr. Dan Bird has come back, and we are going to try something brand new. We don't know if this is going to work, but I think it is an amazing idea. We're going to have a section called Mailbag, where Dan Bird goes through comments on his videos and picks out 3 or 4, and he actually takes the time to answer. So if you like this idea, let us know below. If you like the idea and want to have your question considered, put it below. And Dan, hopefully you've seen in the comments that people thoroughly enjoy and look forward to your sessions. So thank you for coming back each and every week. I appreciate you as the audience does. So thank you.
Yeah, in fact, we asked last week if anybody would be interested in a live question and answer session and training, that type of thing. There'll be a lot in it, but a lot of people said yes.
Yeah, we got to talk about that and get that thing scheduled. I think the overarching answer is yes.
Yeah, and I'll talk a little bit about that as we go through the answers to these questions.
Okay.
Because it kind of dovetails into that as well.
I like it. Let's go. What's question number 1?
Well, first, let me share my newsletter for those that didn't join us for the last session. If you would like to receive it, just send me an email to breakpointtrading@gmail.com, and I'll add you to the list. There's no charge, and I don't sell emails or anything like that. Mm-hmm. So it's really just sharing my own research with folks.
Yep.
So if you're interested, go ahead and send me a note. All right, so let's look at the first one. The first one is the shortest question, but we'll have the longest answer.
Okay.
So we'll see if we can get through this. It might be a little esoteric, so just try to bear with me. And if you think it's getting too detailed, Mike, just let me know.
Of course.
So I'm curious to know if Dan has any broad indicators to help him quickly identify which opportunities may be worth a deeper analysis. Yes, it's a great question.
No, so I'm just going to see, I know you've prepared stuff, but I want to take this question and remind people that if people go back in your playlist and talk about you helping me learn French, you're going to go through some things that you think are likely great for the early person, but knowing you're also going to share what you use, which may be more advanced. So again,
yes, it will definitely be more advanced, and I am going to share what I do. Yeah. This is one of the things that I do every weekend. So what I do is I accumulate basically what I think are the best of the best using all the tools that I have available to me. Now, most of these tools have costs attached to them. Mm-hmm. They're subscriptions, right? But I'm able to kind of combine the best of the best. And that's what I'm going to show, how I combine that. And that's where I come up with my candidates for trading. All right. So the first thing that I do is I use Earnings Beats, which is Tom Bowley. Mm-hmm. And one of the things of value that he does is he creates these chart lists. So he's got a strong earnings chart list, which I think is the best one. It's the one that I focus on. It's basically a list contains companies that have beaten Wall Street consensus estimates on both revenue and earnings, are liquid, and have solid technical charts. It's updated every 2 to 3 weeks. And he puts it here. And because I am a stock charts member, all I have to do is copy this password right here. Right. Mm-hmm. And click on stock charts. And then add the password in and unlock the list. So that gives me the list. Now there are 555 stocks in here. And this is all in his view. Mm-hmm. And then I save this to my own list, which I call EB number 101. It's list 101 right here. See that? Yeah. So every time Tom updates that strong earnings, so remember, it's companies that have beat top and bottom line and have good charts. Okay. So that has proven to be a really good list of names. Now 555 is a little too much.
Yeah.
Okay. So what I do then is I'll go into that particular list, which you see right here. Mm-hmm. See 101 strong earnings chart list, 555 names. Yep. I will then transfer that over to VectorVest. And I'll transfer all of those names into VectorVest. And then I will sort these based on some VectorVest components. First one is RV, which is relative value.
Mm-hmm.
And I can tell you what that is right here. So relative value in VectorVest is an indicator of long-term price appreciation potential. This indicator is far superior to a simple comparison of price and value because it is computed from an analysis of projected price appreciation 3 years out, AAA corporate bond rates, and risk. Okay.
Mm-hmm.
So that's the one that I use. And then the other one that I sort on is growth. So earnings growth. Growth, it reflects a company's 1 to 3 year forecasted earnings growth in percent per year. This particular one has 46%, which is excellent. So what I'm looking for are, out of that list of 555, I'm looking for the ones that have RV of 1.2 or higher. One is medium. So anything below one is bad. Anything above one is good. And then I want long-term earnings growth of 20% or higher.
Oh, wow.
All right. So it pulls out of that 555 a certain number of names. I then add to that list the earnings beat bullish trifecta, which they take anything that's in strong earnings, raised guidance, and strong accumulation distribution. It has to be in all three of these.
Oh, wow.
All right. So anything that's in all three of these lists, you see in this case, there's 75.
Mm-hmm.
So I add that. And then I go back to VectorVest and I take the top 50 names in VectorVest out of the stock viewer. And these are ranked by VST, which is value, safety, and timing. So VectorVest combines all of these rankings into one ranking. And these are the best of the best for VectorVest. So I pull 50 of these out and I include that in the list as well.
Okay.
And what I end up with at the end of it is a chart list that I call best chart lists all. Now I also add to this everything in the NASDAQ 100. Now, everything in the NASDAQ 100 are usually high growth stocks, but they may not necessarily meet the RV and growth criteria from VectorVest, right?
Correct.
So that sort would have missed those. But I put them in here anyway, because I'm going to sort on them in multiple different ways.
Right.
And some of these might be growing enough to get into those categories pretty quickly.
Okay.
Now, so if I edit this list, you can see now there's 165 total names.
Right.
That's much more manageable.
Correct.
Now, from this is the chart list that I use for the rest of the week. And if I'm looking for candidates, this is what I use.
So let me just, again, you went through that. You went through that really fast for us. And again, you've done this hundreds and maybe thousands of times.
Right.
Does that take you 15 minutes, 20 minutes to get to this point? Or is it an hour?
Yeah, that's a good question. So so I transfer back and forth between stock charts and
oh yeah, I get it.
VectorVest, right? So it takes me, and this is something that I do every weekend. As soon as I finish my mailing, my newsletter, the next thing I do is this, and it usually takes me about 15 or 20 minutes.
Yeah, the reason I wanted to say that again is I figured that's where we were because it's the same process every time. But now that you're here at 165, you're in this list for 4 or 5 hours. What are we talking?
I am in this list for the rest of the week.
The week or the weekend?
The rest of the week. Everything that I do the rest of the week. If I think that the market is ready to go up and I want to find some candidates to trade.
Okay. So you're on this list all week. That's important.
This is the list that I use. Right.
Okay. All right.
And
then you do it all again next week because it'll be.
Then I do it all again next week. Now, because of that, a lot of the names are the same.
Of course.
Right?
As they should be. Right. Yeah.
As they should be. But there will be a few that get added here
or
and there.
Off. Yep.
Right.
Yeah, okay. That makes
and then
sense.
in VectorVest, there's a number of different ways I sort. So VectorVest, I have a sort right here that takes that same list. And now it's looking for the ones that just became a buy, that just changed from not a buy to a buy.
Got it.
All right. So out of that list of 165, there's only 2. And then what I'm doing right now is I'm experimenting with
I just want to be really quick. So again, go back to that list of 2. I'm sorry.
Yep.
You're not just looking at those lists of 2 and placing a buy order. That's just a sign. Go look at these.
Yeah. So the next thing I do is I'll graph all. So there's only two. So I'll look at the graph and I'll say, look at the earnings. That's the most important thing. Are the earnings going from bottom left to upper right?
Mhm.
And they are. Is this one that is not at the, at its resistance,
Right.
just starting to move higher? And this one is. And there's a number of different ways that I can look at the chart for this. So that one looks pretty good. This one here looks pretty good. I actually bought this one last week as well.
Okay.
So you can see that here's the earnings. They've been kind of flat, but starting to trend higher.
Yeah, this is really fun because I don't even know what company this is.
Yeah, Globant Software. They actually, I can.
Now, does that matter to you at all? Do you give a rat's ass? Like, if your chart says buy it, do you care that you know nothing about it?
I do care.
Okay.
Software,
But not very much.
Well, I do care what industry and sector it's
Okay.
in.
All right. So it's the industry and sector. Okay. Got
So
it.
that's important. I do also care how much of a run up it's had. So sometimes it'll move to a buy when it has a huge up day.
Mm.
Now, I don't necessarily want to buy it there because it's a huge up day is usually going to come back down.
Right.
Right.
Okay.
So that's one that I'll watch. I might not buy it right then. Globant. So what I'll do is I'll go over here and look at, what they do. Provision Information Technology Services offers application development, maintenance, testing, and infrastructure management.
That's funny. You and I used to be in that space.
And that's what everybody does.
Yeah, exactly. It's just a bunch of gobbledygook.
Right.
So
funny. It's a space that's been hot. It's probably going to cool off a little bit next week. We'll see.
Mm-hmm. Mm-hmm.
So the other thing that I'm experimenting with is I've created a portfolio of just the ones that move to a buy.
Mm. And
I started this about 2 weeks ago.
Oh, nice. So you have the date. This is a theoretical portfolio.
This one's a theoretical one, but I'm about ready after this little downtrend. I think we're going to get next week. Okay. Because VectorVest just gave a confirmed up, which I talked about in the newsletter as well, which is very conservative and doesn't happen very often. Right. So usually it's the beginning of a longer term run. Okay. All right. But so what I'm doing with this is when they go from a not a buy to a buy, I put it in here. Mm-hmm. And when it goes to a hold, then I'll look at it and decide if I want to keep it or not. Okay. All right. And if it goes to more than 5% loss in the ROI, again, I'll look at it and decide if I want to get rid of it. Okay. So on this one right here, you can see this has actually come down. This is a good example. This one went way high right here. Right. And gave huge uptrend. So it got a buy right there. Mm-hmm. So I actually waited for it to come down a little bit. Mm-hmm. But right now it's still a buy. So it kind of went down and then now it's starting to come back up again. Okay. So this one, even though it's almost 5% down from where I bought it, actually this green line right here is the buy point. So I bought it right at the top of this candle. Okay. That's actually one of the things I learned from this particular one. If you have something that runs up that much, don't buy it right away. Wait a little bit. Yeah. Give it a chance to breathe. But in this case, it hasn't changed. The buy has not changed. So it's still in here. But if this goes much above 5%, then I might just get rid of it. Now, there have been quite a few. There's probably been 6 or 7 that I've already weeded out of this list because they changed to a hold and I didn't like the way they looked. So I just got rid of them. So this list will cost. It looks pretty good. I mean, that's what it makes total sense that you're taking this from theory to practice is what I hear you saying. Exactly. So yeah, 5.7% right now in 2 weeks. If I do 6% a month on something like this, yeah, the law is 72. How long will it take to double? That would be 6 divided by 72. So 12 years or 12 periods? 12 months. Months. Oh, 6% a month. My bad. That's per month. That's a month. Yeah. Sorry. My bad. And it also lets you do these reports. So you can do a diversification report. See how diversified it is.
And you're buying the same amount in each, like 10 grand or 5
same
grand
amount. Yeah. 5 grand.
Okay. That makes sense.
5 grand in each one. It's $100,000 portfolio.
Got it. So you'll have a max of 20.
That's right. Max of 20. And right now there are 20. So I can't buy any more unless I get rid of something here.
I like it.
So we'll see. We'll see how it goes.
Mhm.
But that's just one idea, one way that I use that list
Mhm.
of best chart lists.
Yeah. So again, the whole idea of this is you go out and collect from the best of the best experts, Tom Bowley and others. You put that in
Right.
one master list. You get to
Right.
a list that you can manage. That's about 20 minutes. And then you're in that list all week. And then you do it
Yeah.
again next weekend.
Yeah. And it's a lot of the names are the same week to week.
Yeah. 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 Of course.
There's only
Yeah.
a few that change. So, you know, depending on what the market is doing, remember I go from market to sector to industry to
Right.
stock. So
I like
depending on what the market, the sectors are doing, if the market goes down next week, I probably won't buy anything.
Okay.
But I'll still be looking at these to see what's
Yeah.
moving.
You never stop looking. That's the key.
Right.
Very
So
cool.
anyway, that's how I do it. That's to answer that question.
All right. That was very good. So what, were you moving the question to, or what are you doing?
When we do that 2 or 3 hour session, I'm going to announce in that a website that I'm creating to make this whole thing easier than doing an
I'm
email.
so happy to hear this is coming.
Yeah. But one of the things that I'll be able to do in that is take that list that I just showed you that I put together.
Yeah.
And provide a link to everybody to that list.
If they wanted it. So your 20 minutes could be looked by anyone.
Yeah. Just the way that I did it with Tom Bowley.
Yeah.
I just did the password and I clicked on it and it downloaded into my stock charts.
I can't believe you're going to give that. That's awesome.
That took 30 seconds. So
right.
Yeah, that'll be part of the website. All right. Let's look at the next question.
Okay.
Understand rotation of sectors, breakdown of how to set up charts, costs involved in getting data from Stock Traders Almanac. Now Stock Traders Almanac is subscription. Tom Bowley is subscription. Stock Charts is subscription. Stock Traders Almanac is around $100 for a year. It's pretty cheap. Tom Bowley is expensive. This is like $1,000 for a year.
Okay.
Stock Charts is at the level, it's free, but if you want to do a lot of the things that I do, it's about $350 per year.
So let me ask you the question this way. Of all the data sources, those three and likely others, how much are you spending a year? If it's a month, fine. If it's a year, fine. How many tools do you have?
Yeah, those are the main ones. It's Stock Charts, VectorVest, Earnings Beats, and then Stock Traders Almanac. Those are the four that I.
Well, Tom Bowley, I thought you had.
Yeah, his is 1,000. That's Earnings Beats.
So what do you? Oh, that's Earnings Beats. Sorry, I didn't know. So we're talking what, $4 or $5 grand a year?
No, it's probably $2,500, something like that.
Okay, so you're talking $200 a month.
Yeah, roughly.
All right, that's cool. I just was curious.
Some of those though I have paid ahead on my subscriptions.
Of course.
Like Tom Bowley, I have I think till 2024, and Stock Charts I have till 2026. So
yeah,
those are all paid ahead.
Right. You got,
whenever they do deals on Memorial Day or 4th of July or whatever, I sign up for the deal and it just gets tacked on to the end of my subscription. So just keep pushing it out further and further.
Perfect. Okay, I like it. So a couple $100 a month are the picks and shovels for everything that you do.
Yeah, exactly.
Okay.
So the rest of these should be pretty quick. So this one talked about rotation. So for rotation, I look at this in Stock Charts, and I've showed this before. So in Stock Charts, it allows you to create a chart list. And in this case, it's all of the sectors. So you can see technology, et cetera, and then the S&P. So when I rank these, it puts them based on, I just click any of these columns here. So amount change, what I do is click the percent change, and it shows me the ones that have gone up the most and the ones that have gone down the most at the bottom. And now I see what the rotation looks like in the sectors for this period. In this case, it's year to date. So you can see the three aggressive sectors have been outperforming year to date.
Wild. How about, can you change it to the month or week or whatever?
Yeah. So if I go, so that's how I do sector rotation. So if I want to look at a 3-month period, so now it's still the same three.
It is the same three. Wow.
So over 3 months, they have still been pretty strong. But a couple of these are starting to move up a little bit. Healthcare, staples. Now, if I go to 1 month, still got the same three up here, but now industrials and financials over the last month, and even energy is making a comeback, and materials.
Okay.
All right. So they're coming back. So now if I look at it, so remember what I said, and you might have already seen this, but technology has a great run from the beginning of the year.
Mm-hmm.
NVIDIA, after the NVIDIA, everything went up. The last week or so, technology has been selling off.
Yes.
And some of the articles I've been seeing, and even on CNBC, they said there's not enough breadth in the market. So when those 7 names start to sell off, the whole market's going to crash.
Yeah, I've seen those as well.
That's true if that money moves to the sidelines into cash.
If it goes to cash. Exactly.
Right. That is true. The market will crash. But if that money moves to other sectors,
exactly.
In other words, rotate and broaden out, then the market not only will not crash, it will push everything higher.
Yeah, it's healthy.
All right.
Yeah,
So let's look at what's happened in the last week. Here's 1 week. Now look at it. Here's the S&P. So everything above the S&P is outperforming the S&P. Now we've got materials, real estate, financials, industrials, energy, utilities. The only aggressive sector in here is consumer discretionary, which is the one aggressive sector that had been lagging previously.
Right.
And now it's at the top. So what this is telling me is that the money that's rotating out of technology and out of communication services is not going into cash. It's moving into these other sectors.
Yeah, that makes sense.
And that's going to push the market up. Now I can also do the RRG, which I put this in the newsletter as well. The relative rotation.
I love this chart. This is a magic chart to show you. Yeah, I like this.
Yeah, so this is a 1-year weekly chart. I can put it on a daily. And now you can see technology and communications are starting to move down. You can see consumer discretionary moving up, and you can see all of these starting to now move up into the improving sector. Yeah. Moving out of lagging and into improving. And the idea is that these should then move over here into leading. But the more important,
it looks like a broadening out, because there was 2 options,
exactly,
right?
Exactly.
Collapse, or
that's right.
Everybody else picks up. Yep.
That's right. Exactly. So it's broadening out, which is very healthy for the market. So if we get a pullback next week after the CPI number, which is what I expect is going to happen, I see that as very positive, very healthy for the market.
I look forward to talking about it next Sunday. That's good. All right. What's
all right?
Question
so
number 3?
Let's go to the third one. Okay, we're just going to look at some charts now. This person said, look at Google, Apple, Amazon, Microsoft, SPX leads me to believe this could be a significant resistance level. That's true. It's possible SPX keeps going higher, but I believe the probability of at least short pullback. Very astute. If people get into these names in the last few months, 2022, 23, are looking for a place to take some profits, this is a great level. I totally agree with that. Also, all these names are at the top of their Bollinger Bands. We'll look at that in a second. Secondly, I would like to draw your attention to SPX from October 7th to 07 to May 08. And I think he's talking about the years 2007 to 2008.
Correct.
During that time, also the peak to the trough was more than 20%, then bounced halfway back, like we're seeing now, but then dropped another 50% from that point. I'm not predicting the same thing. However, whenever we do see a pullback, we change my mind and switch to being bearish if it were to fall below the 50-week moving average. 50-week.
Sounds like this guy knows what he's talking about.
Yes, except for one small thing.
All right.
What does the 2007-2008 timeframe mean to you?
Well, to me, it's the Great Recession, but I think you're going to talk about it being a bear market versus a bull market.
Yes.
See, I've been paying attention.
You're paying attention. It's the secular bear and secular bull.
Yeah.
All right. So 2007 to 2008, this is the 50% decline he was talking about. This is in the middle of a secular bear market. We are not in a secular bear market. We are in a secular bull market. So if it does pull back, which I think it will a little bit, and I actually think it's healthy for it to, but I don't think we're going back down below this red line again. It's that 3750 right now. Yeah, I think we're going higher. We're going to the top.
Yeah. So the one thing that, again, a very astute question, Bollinger Bands, all that stuff, the guy knows, guy or gal knows who he's talking about. But yeah, I do think the one thing is, and again, you brought this to me in our very first video, is like, the first thing we got to talk about is I believe there are secular bear and secular bull markets. They run about 20 years. And everything you look at when you talk about '08 or this or that, you've got to ask yourself, is that a bear
Yeah.
or a secular bear?
You
or
have to
secular
have
bull?
context, right?
Yeah.
The
I like
Bears
that.
run 12 years, the Bulls run 20 years. So
Thank
this is the Bollinger Bands that he talked about. So let's look at each of his names. So Apple, here's Apple. It's right at the top of the Bollinger Band, right there.
Mhm. Yep.
See that, right?
Yep. We can.
All right. And it actually hasn't gotten to that third ATR level, which is usually where they reverse and go back to the mean. But this one could get the mean. The line in the middle is the mean. So any pullback, that's where it will go to. And this is a great example of a bull market. Notice how this goes up and pulls back to the middle, goes up, pulls back to the middle, goes up, pulls back to the middle, up to the middle, to the middle, to the middle.
Yeah, look at that. Haven't seen
every single time. That is a bull market right there.
Okay.
So if it does pull back, that's what I expect to happen again. And that's the point to buy or add.
Okay.
Add to your position.
And that was Apple.
What was the other one?
Microsoft?
Google, I think, was one. There's Microsoft. It's basically already back to its mean.
Okay.
Google. There's Google. It's already off of the Bollinger Band at the top. It's already coming back to the mean. So, you know, if Google sells off some more next week, it might be a good time to buy it. By the way, notice when the Bollinger Bands narrow and they get pinched right here, or they squeeze together.
Yep.
Whenever that squeeze gets inside of this first ATR level, the darker green one, that means it's coiling up like a spring, getting ready to explode. It's not necessarily telling you which way it's going to explode.
Right.
But it's going to explode. Now, this is the Bollinger Band width at the bottom. You can see when it gets way down here, that means that it's squeezing together, and then it explodes higher. Okay. So that's the point when you see something like that, and it's starting to squeeze up here again too. When you see something like that, get ready, because it's getting ready to explode one way or the other.
Okay.
What was the other?
I don't remember.
The other name you had? Amazon, Microsoft we looked at. Yeah, Amazon and SPX. So let's just look at those real quick. Okay. The last question is going to be real easy.
All right.
Amazon. There's Amazon. So yeah, I mean, when he wrote that, this is a daily chart. So when he wrote it, they actually were up here at the top of their Bollinger Bands. So that was very astute of him. You know, I think he wrote it last week, so it was way back here. Yeah. And he was saying, you know, they're at the top of their Bollinger Band, so it's a good time to take profits. And he was absolutely right. Yep. So Amazon came down. It's kind of going up into a bearish channel. So I expect this one to come back down to the mean as well. Okay. Down to around 120. So if we do get that sell-off, it'll be a good time to add to some of these positions. Okay. Not to sell more like he was suggesting. He was using the secular bear market as an example, and that's the wrong example to use.
Yeah, we're in a okay. I like it.
And here's the S&P, also at its Bollinger Band, also in the third ATR. This is why I think we're going to get a sell-off. Get a pullback. And
again, you're talking about the sell-off to go into video number one, not necessarily Monday or Tuesday. You think it's in the later half of the week?
Yeah, I think Monday, probably everybody's going to be waiting for CPI. So probably nothing will happen, or not much will happen. It might go either way, up or down a little bit. I think Tuesday we'll get the CPI and it will take off, but it will gap higher. It will open higher and sell off.
Sell off the
rest of the day. And then going into the end of the week and options expiration, I think the market makers are going to push it down so that they don't have to pay all that premium. Okay. And going into next week, that will still be the case. So sometime next week is the time to take a look at these to see what they look like.
Very, very cool. And the final question?
Final question is, might not like me for this one. Average person didn't own any meaningful amount of stocks until the 1980s as 401k became the marketing rage. Bitcoin adoption will return us to that point because direct investment via Bitcoin lending will completely replace stocks. Network effect and superior profit margins win.
Oh, be nice, Dan. Be nice.
Well, I mean, the point, my answer on this is that he's comparing apples and oranges. Okay. He's trying to put these two things into the same bucket, but they are not the same. Mm-hmm. In fact, they are very, very different. I don't know if this, let's see. This is Warren Buffett. I don't know if the volume will come through. Let me try this and see.
Yes, I'll tell you.
It's not very long. It's just a YouTube short. Let me see if the volume comes through.
All right. No. Not on my end.
You can read it.
Yep.
All right. So the point of that, I don't know, couldn't hear that, could you?
No, we didn't hear anything, but we could read it.
Okay, but you can read it. So the point that he's making is you could buy a farm and they could ban trading in farms. They could say you can't, no one can buy any more farms, but the farm is producing something.
Correct.
You will still make money with the farm. If you buy stocks, stocks are a representation of the companies behind it. Mm-hmm. The companies are still turning a profit, mm-hmm. making earnings, etc.
Adding value. Yep. Mm-hmm.
Adding value. If they stop, if they ban trading stocks, the companies behind it are still producing. Mm-hmm. If they ban buying apartment buildings, you are still collecting rents. Mm-hmm. The apartment buildings are still producing. If they ban buying Bitcoin, let's say the government says we are going to create our own digital currency and nobody is ever again allowed to buy Bitcoin. Mm-hmm. That's it. You're done.
Yeah.
Bitcoin is speculative. And like Warren says, there's nothing wrong with that.
Yeah.
You're counting on someone else to buy that from you at a higher price, not because of what it's producing, not because of the earnings that it's generating, not because of the food that it's producing, yep. Mm-hmm. but simply because somebody else thinks it's worth more than you do. Mm-hmm. That is speculating. There's nothing wrong with that, but it is not investing. And that's yep. why it's apples and oranges to try to compare Bitcoin with 401ks on the stock market.
One of the things you're going to get to learn when you have your own YouTube channel and website is you are going to run into what's called Bitcoin maximalists. And no matter what you say, you're going to be wrong and they will attack you. I suggest finding the block button and just letting them go. Because if they want to do what they want to do, go nuts.
That's fine.
Yeah. So Dan, do me a favor.
Yeah.
Go ahead. Show your newsletter one more time so we can wrap this week up and sure. Look forward to next week.
breakpointtrading@gmail.com. Just send me an email and I'll add you to the list.
Thank you so much. Have a great week.
By the way, there are folks like that with Apple and with Tesla.
Of course.
Bitcoin.
The Bitcoin maximalists are a different breed, as you will find out shortly.
Right. That's fine. That's fine.
Thanks.